Welcome to Drilling into Crypto. I'm your host, Mohammed El Masri. Every week I speak to the leaders that are driving the global financial revolution. Drilling into Crypto puts the spotlight on the importance of crypto assets, on energy markets, and on global monetary policy. In today's episode, we've got Andrew Kiguel. Andrew is the co-founder of tokens.com, co-founder of Hut 8 and ex-CEO of Hut 8 Mining Corp, which is a publicly listed mining company in Canada. I see your background is mainly investment banking, which is to me really interesting because that's where I started off my humble career. And before I quickly transitioned into the digital asset and Bitcoin mining space. But I'd like to learn more from you and how you took that leap to transition from traditional investment banking and into the digitized financial services world, and right now decentralized finance with tokens.com, which seems really interesting.
Yeah, so I was a traditional investment banker, primarily in the real estate space for many years here in Canada. And back in 2016, I started doing some research into Bitcoin. And like most people that start looking into Bitcoin, especially back then, it was with a skeptical view of this seems a little bit fraudulent or like a Ponzi scheme or a bubble. And I didn't get it. But I kept digging in. And actually, one of the first guys that kept coming to me and sort of pushing it was Fred Pai from 3IQ. If you know him, he runs the first regulated Bitcoin fund here in Canada. And so this was back in 2016. And he kept coming to me and saying, I want to do this and I want to file a prospectus. And I kept saying, man, I don't think that's going to work. Like the regulators aren't ready and I don't know if I'm ready. Then in 2017, I started getting a little bit more involved and looking at the stuff. And it was another group that came to me called First Block. And it was Mark Vanderchijs and Sean Clark. And they came to me with the same idea that Fred Pai had. And Fred at that time had started working with Canaccord. I was at GMP. And I said, guys, why does everyone want to do a prospectus offering here? Why don't we just put out an offering memorandum that doesn't need to get approved and just do this as a private placement? And everybody sort of scratched their heads and said, can we do that? And I said, yeah. And so the very first public or available to the public Bitcoin fund was the First Block Fund that I went out and did a fundraise for. And I believe we raised a whopping $12 million for it. There wasn't a lot of demand back then. This was, again, middle of 2017. But one of the things that did come into that was a friendship with Mark Vanderchijs and Sean Clark. And we started talking about things. And me, I'm less of a technologist and I'm more of as an investment banker, you're constantly finding different ideas and finding ways to transform them and bring them to public market investors. And we said, what's really missing right now is a way for people, they had this little public fund, but we said, what is a different way to get a publicly traded vehicle that gives people exposure to Bitcoin? And that's how Hut 8 evolved. And so we sat back and we said, okay, let's do this. And as a banker, I had been looking at a whole bunch of different mining companies. And I was like, most of these, the people are underestimating the amount of technology required or the skill set required. I said, why don't we remove some of that technology risk factor for investors and team up with somebody who's been doing it for a while? So Mark said, well, I know the guys at Bitfury, and he jumped on a plane and flew out to see them. They were in Eastern Europe. And within 4 weeks, we had the basis for what turned into Hut 8, which was a cryptocurrency Bitcoin miner based in Canada that would hold its Bitcoin. Now, today, it's pretty, I wouldn't say it's trendy, but it is a huge topic of conversations for companies to hold their Bitcoin, balance sheet in Bitcoin. And you saw that with MicroStrategy and Square. But really, as I always say, the OG of doing that was Hut 8. All that entire strategy was something that was formulated at the very beginning by the co-founders. It was a deliberate strategy to hold Bitcoin on the balance sheet that we mined. And so we got that off to the races. I then left GMP to become the CEO of Hut 8. And, another thing that I was sort of thinking about these days is, Bitcoin today is had this resurgence that we haven't seen since 2017. But I was actually one of the first public company CEOs to get paid. About half my salary was paid in Bitcoin. And I think I may have been the first public company executive when I was a CEO there to actually get paid in Bitcoin. So that was a couple of things that today, I think you're going to see more and more people getting paid in Bitcoin. You're starting to see people talk about that, whether that's athletes or CEOs. But back in early 2018, holding Bitcoin on your balance sheet and getting paid in Bitcoin, these were not things people were talking about. But anyways, while at Hut 8, I oversaw the build out of about 110 megawatts of power, making it one of the largest Bitcoin miners in the world, took the company public, did the initial fundraising and ran that for a while. And then 2018, we entered into crypto winter, which I'm sure you're aware of. And at that point, running Hut 8 was largely an exercise in keeping the company out of bankruptcy, because as a lot of miners didn't survive. But when you were dealing with $3,000 to $4,000 Bitcoin, certainly the economics of mining weren't strong, as the hash rate kept doing this and the price kept doing that. And I always say, and then I'll stop after this for questions from you, but I always say that when Satoshi Nakamoto, whoever he was, whether he was an individual or a group, developed the proof of work blockchain algorithm, I don't think he ever envisioned that this would be done on an industrial scale the way it's being done today. It was always envisioned that this would be something people can do from their computers, and if it was economic, you would mine from your house, and if it wasn't, you would shut down, and then that reduction of the competition would make it economic for everybody else. So it was a self-regulating system. What happened in 2018 is everybody raised all this capital and took this to an industrial scale, through the development of the ASIC chip several years ago. So we went from GPUs doing it at home to specialized machinery. And then you had these companies that raised hundreds of millions of dollars, ordered the equipment, and then had no choice but to do it. I mean, you order $100 million of ASIC chips for the mining of Bitcoin. Doesn't matter if the price of Bitcoin nosedives. You've got that equipment, you're going to start mining with it, or you're going to do something. So you had the phenomenon there that I don't think was ever envisioned, and people don't talk about it enough. But the way the mechanism was always created is that the price of Bitcoin comes down, people would stop mining and make it economic for the people that remained, and vice versa as it went up. You had that opposite economic impact in 2018, where the price dropped by 90%, the price of Bitcoin. Yet the hash rate, which is the level of competition amongst miners, went up 180%. And again, that's just because everybody raised this money and they didn't know what, you bought this equipment, you were forced to continue mining. And I think, one of the reasons I left Hut 8 was that I think there's a better way, which led me to proof of stake. But I think, two things. People are always talking about the things that could bring down Bitcoin. And I'm a big Bitcoin maximalist. I love Bitcoin. But as I was thinking about it over the last few days, and you see some of the pressure from environmentalists, I think the one thing that could put pressure on Bitcoin is not the regulatory environment. I think it's actually going to be the environmental regulatory environment that could actually hamper what's happening with Bitcoin miners. And I know there's all this talk about it being, a lot of environmentally friendly mining. I don't know that I buy that. I know too many groups doing stuff in Kazakhstan and in different places, and it's using fossil fuels. But anyways, that led me to tokens.com and a view that, proof of work technology, which is crypto mining, is really a 12-year-old technology right now. And technology, as everyone knows, evolves. And the next iteration of that blockchain validation technology is proof of stake. And proof of stake is what I call the environmentally friendly method of doing the same work that a crypto miner does. And it's done through a voting mechanism that doesn't require a bunch of machinery and electricity, and it's instead done through the delegation and using votes and ownership. So you can say, great, we're all owners of Ethereum 2.0. We see a transaction go from me to Mohammed. Great, that's a real transaction. Credit one side of the blockchain, debit the other side, and process that transaction, and it's done without the machines and without the electricity.
That's all very interesting, but I'll come back to the mining point in a bit, but back to the private placement method that you wanted to pursue. And I think that's, I think it's genius because it's so simple, right? Because people kind of did not look at it the way they should have when everybody was caught up with the regulatory hurdles and the regulatory setbacks, when there are already regulatory frameworks in different jurisdictions that are in place that can be used in order to issue and provide exposure to investors to such an asset class. And I find it very interesting that someone much more advanced and senior than I am was able to take that forward and actually pursue it and be successful with it. Because I was of the same view, but my focus was Middle East region at the time, in the Gulf region. The regulatory environment here was so sensitive to digital assets that every time you would try to do something, you get cold feet, because then the regulation is not so clear whether they want to treat it with special regulatory frameworks or guidelines, or whether they want to adapt it to the existing frameworks. And I think Canada is on the forefronts with its regulations, and the regulatory environment there is so transparent, and the guidance is very strong, that entrepreneurs like ourselves are able to, and innovators in the financial arena are able to take these kinds of offerings forward. And I think it's very important. And, hats off to you for being able to do that.
Well,
you're welcome. But fast forward to the mining part, I think you're absolutely right. There are these environmental concerns. And I think proof of stake is an interesting way, but does that have the same, when people look at Bitcoin mining and they see and those who were able to withstand the 2018, 2017, winners were, and still continue mining up until today and hold their Bitcoin, they reap the benefits out of that. But when people think of Bitcoin mining today, they're thinking of how profitable it is, the returns, and also how, for some people, how cool it is to just mine, right? And be able to be part of this financial revolution. Does proof of stake have that same risk reward ratio, or even the returns on investment with proof of stake? I mean, you need to own a few coins to be able to contribute to the network, or whichever network you want to be a part of. But what I'm trying to ask is, what kind of capital investment you need when you're doing proof of stake, and what kind of capital investment you need when you're doing proof of work?
So on the basis, or on the surface, I should say, the economics in proof of stake are substantially better, as is the technology. So let's take it from a residual value perspective. So if you're mining, and I'm going to stick to ETH 2.0. So Ethereum is making the transition, for your listeners, from proof of work to proof of stake. Proof of work being buying the machinery, which primarily is done via GPUs in ETH, and consuming a bunch of electricity to perform that cryptology work to secure the blockchains. Ethereum is making a transition over the next couple of years to go fully to proof of stake. Okay, that's happening now. Why are they doing that? The ability, the number of transactions that can be processed, and people often complain about the gas fees on Ethereum, but the number of transactions that can be processed, as I understand, on proof of work Ethereum, is about 15 transactions per second. A company like Visa or MasterCard can process about 20 to 25,000 transactions per second. Once Ethereum is fully moved over to proof of stake, it will be able to process 100,000 transactions a second. Okay, from 1.5 to 100,000. Okay, and that's the same on Bitcoin. Bitcoin only processes about 15 transactions per second in the proof of work. So you're talking about a monumental lift here in technology, in that, yes, digital assets is all relatively new technology.